Okay, let's check in on equity markets around the world. We'll take a look at the European markets now. You can see it is a modestly down day in the European markets as well. The FTSE 100 down very slightly, so too are the CAC 40 in Paris and the German DAX index in Frankfurt, Germany as well. Okay, let's get to those Canadian inflation numbers. Headline inflation comes in at 2.8% in the month of June. That is a softer annual pace of inflation than economists had expected. Economists had expected 3.0%. 2.8% is the number, and 3.4% was the number from May. So inflation, as expected, falls significantly from May. In fact, it falls more significantly than economists had forecast. Let's see where the core inflation numbers come in. They are what really what are in focus from the Bank of Canada. There, the news is a little less bright. Core inflation, as measured in the median version of core inflation, holds firm at 3.9%. So it does not budge at all from the May number. Core median inflation in June, 3.9%. That is 20 basis points higher than economists had forecast at 3.7%. And the core TRIM measure, the StatsCan publishes two different versions of core inflation, also comes in higher than expected at 3.7%. That's down 10 basis points from 3.8% in the month of May. So the takeaway here is that headline inflation falls significantly and more than expected, but core inflation remains very stubborn and holds in at 3.9% on a median basis. Let's go now to Pedro Antunes. He's chief economist at the Conference Board of Canada to help us understand these numbers. Pedro, I'll do my best to come up with some numbers beneath the headlines, but what is your takeaway there? One of the key takeaways appears to be that core inflation remains very stubborn.
Yeah, unfortunately, I think, what's driving or has been driving down inflation in the past two readings, certainly, and perhaps even more further back than that, has been the decline in gasoline prices. That's contributing a lot to the top line number on inflation coming down. Statistics Canada keeps reminding us that that's a base year effect, because a year ago we had gasoline prices come up very, very significantly, very strongly. The other disappointment here is that food prices continue to rise, and as you point out, core inflation, which excludes some of these very volatile items, is continuing to be sticky. And this is what the Bank of Canada, certainly in the release last week of the Monetary Policy Review, they were really focusing in on that core inflation number, which has, on a monthly basis, kind of a moving average month-over-month basis, remains sticky in that 4% range. So this is now what the bank tells us they're looking at. I keep saying I think we've got the foot on the brake pretty hard here. I don't think we need further rate hikes, but certainly this suggests that the bank is going to keep the foot on the brake for a while longer.
To what degree is the tight labor market feeding into inflation? I know coming into these numbers, you said that the bank is struggling with the strength in household spending and concerned that the tightness in labor market will result in wage-led inflation. Are we seeing that?
Yeah, I mean, I think, certainly in the last reading from the labor force survey from Statistics Canada, we saw some easing pressures on essentially year-over-year wage growth, which had come below the 5% to around 4.2%. So certainly that was good news. The last reading on employment, we got some very strong employment numbers in June, but we also had an increase in the unemployment rate. In other words, the number of people coming into the workforce far exceeded the job creation number. So in a way, that was good news. We know that we've seen a lot of new Canadians arriving in Canada over the past year. So this is adding to the pool of workers. And perhaps, certainly I think the fact that the unemployment rate has edged up a little bit is kind of a better news story around, essentially those wage pressures. And we're still seeing where, some of the inflation is persisting is on that service side of the economy, which is still recovering from the pandemic and still under a lot of pressure in terms of labor markets. So, I think there's some good news there. The other good news, of course, is that, inflation is within the target band now. The top line number at 2.8%, that's between the 1% and 3% range that the bank is targeting. So I think we're heading in the right direction overall. We just need to get some of these other pieces around inflation down.
Is that misleading, though, Pedro, to concentrate on the headline number, which is 2.8%, when core inflation remains so high and unchanged from May?
Well, I mean, let's not forget that what affects the consumers is the top line number. That is the basket that consumers are having to pay for. And the fact that that's down now below 3%, I think that's definitely a good news story. Now, for the bank, essentially, I think they're, pushing hard on the message that they need to keep interest rates high to convince folks that they will succeed in getting inflation down to that 2% range. So this is kind of playing a game around, expectations, making sure that people are convinced that they're going to get us there, helping to essentially take pressure away from that discussion that employers and employees have around where to settle on wages. So I think we're seeing the bank continuing to essentially push that message forward around keeping the foot on the brake pedal here. But nonetheless, I think this is good news on that top line story. And I think one thing that's really important here, of course, and it's a bit of a problem for the bank, is that one of the big contributors to inflation, certainly in the last few months, is the mortgage interest cost portion, which of course is being driven up by high rates to begin with. So that's another piece that, as we see the essentially interest rates stabilizing, we should hopefully see that component starting to come down as well.
A couple of the big moving pieces are gasoline prices. They dropped by 21% in June versus the June of 2022. And food, you mentioned food still rising. That's one reason that the core inflation number is so stubborn. Food prices 8.3% higher in June of 2023 than they were in 2022. What are some of the factors causing that food inflation, Pedro? The grocery store has got a lot of blame for it. What are some of the factors feeding into food inflation?
Well, I think it's just been one thing after another on the food inflation piece. I mean, if you go back to even pre-war, we had problems with weather that drove up commodity, essentially grain prices. And of course, if you drive up grain prices, you drive up feed for cattle, and that drives up prices there. Then we saw that commodity price shock with the Russian invasion in Ukraine. Food prices remain fairly elevated. I know a lot of food prices have come back down to pre-war levels. Certainly the grain prices have done that, but we haven't seen that play out. I kept saying that we should see that eventually play itself through the food, essentially the manufacturing supply chain on food, and eventually see that coming to ease prices for households at the grocery level. But we haven't seen that happen yet. We continue to see very strong inflation on food, and the concern is that we end up with another shock. And of course, we're hearing now that Russia is not going to extend that deal, allowing Ukrainian grain out of the Ukrainian ports. So I just worry that we're going to end up with another hiccup here that, it's external to what the Bank of Canada can control, but obviously it's problematic globally, and it's going to be problematic for Canada if we do see another tick up in commodity price for food.
Okay, you don't believe the Bank of Canada will raise interest rates again, is that correct?
I think we have, essentially interest rates at high enough levels that they will continue to eat away at aggregate demand. So we don't need to press the brakes any higher. And I think the bank will wait and see now going forward.
Where do you see inflation going? Do you agree with the Bank of Canada that it'll be mid-2025 before we get to 2% on headline inflation?
Yeah, I think we're aligned with that. We do see, the kind of core inflation numbers being sticky for a while yet because of all the factors that we talked about, essentially mortgage interest costs and some of these other components that we just discussed. So it will take some time, but I think we are on a path to success. And there are good news stories, even in the readings we saw in the last couple of months, around the impact that we're having on, for instance, durable goods. We know that global supply chains and the snags around global supply chains have certainly eased. Consumption is normalizing. It's just the strength of the Canadian economy continues to be quite resilient, and I think the bank is still concerned about, as we discussed, those wage pressures.
Pedro